story gets bigger and bigger every time I hear it. So, but thank you, Larry. I appreciate that. My name is George Klinke. I am with Leasier Pay here. We operate in the deep subprime credit space. And so you have super prime, you have prime, you have non-prime, you have subprime, and then you got us. And so I don't know if there's a letter you can put on it or not, but that's where we are. And this is an industry, not the leasing side of it, but the buy here, pay here side that has been around forever. It started back when, unless you were a prime customer, could put 20% down and make the payments on a 24-month loan, you had to go someplace else, and that was usually a buy here, pay here. That was the alternative lending back then. Larry asked me to express my opinion on how marketplace lending might be impacting the traditional financial services world, and having been part of that for 35 years, he thought I might know something about that part of it. This marketplace lending has been pretty fascinating to me, and what seems to be happening there. And the reason that it's interesting is if you go back over 35 years in the traditional finance arena, the big disruptors in 35 years was consumer leasing, and the second one was subprime. Woohoo! You know, not much going on in 35 years in the traditional finance world. Now, consumer leasing really started ramping up in the early 80s, and as we all know, that's a big deal now. And so it got its legs under it, got a little out of control for a while, regrouped, and now is a big deal. And subprime also didn't used to be much of anything out there, but as people got more comfortable with the lower credit tiers, understood the risks, could price properly for it, and knew how to service it, like First Associates knows how to service things, then it became a profitable segment and you could do things with it. So this marketplace lending, is it a disruptor to this old traditional standard or not? I'm not quite sure yet, but here's some thoughts about it. One thing about the traditional auto financial services industry, it is a $1 trillion industry. Now, $1 trillion is 1,000 billion, so that's a lot. It's doing about 116 billion originations per year, and that's about 60 million new and used vehicles combined. So it's a big deal out there, and that takes a lot to disrupt. You have to do something pretty staggering to make an impact there. Now, I'm new to marketplace lending and all that's going on, and based on things I've seen over the last few weeks, I don't know if anybody really knows what's going on right now. And there's a whole new world out there today versus 6 weeks or 8 weeks ago when it comes to this particular market. But based on that, sans the lending club debacle, here are some thoughts that I have about this. The line between online lending by traditional lenders in the auto space, for example Lightstream, who's affiliated with SunTrust, versus online marketplace lending is kind of a blurry line. So what is marketplace lending here and what is online lending? You know, what is the difference there? And I believe one thing about marketplace lending and this question is that marketplace lending is driving online lenders to do a much better job than they were doing before. Because whether it's in the auto space or in the other spaces that marketplace lending is originating business, they're doing it in new, exciting, user-friendly ways. And I think that's helping the online lenders tremendously. Another point that occurs to me is that marketplace lending seems to work best in underserved business segments. For example, consumer loans and small business loans that the banks retreated from after the recession and still haven't come fully back when it comes to that. So that's kind of an underserved market. And with that vacuum, something new kind of came to play there, and that seems to be marketplace lending. In the auto space, there's still plenty of aggressive lenders across all the credit tiers, both online and in the dealerships. And so it'll be hard for marketplace lenders to penetrate because there really isn't a vacuum there for them to fill, at least at this point in time. The third point, the performance metrics of auto portfolios from traditional lenders have a long and well understood history in the securitization market, with the exception of deep subprime lenders that are currently launching a few offerings. They put a few of those out there, and everybody's getting a little heartburn with those at this point in time because they don't have all the information that your subprime, prime, super prime, those particular portfolios have. And I think it's going to take marketplace lenders a long time to create a confidence level that will allow it to offer affordable and competitive rates in the auto space. I think available funding will be limited. Now, I'm hearing different things there, that there is a lot of funding available. So again, I'm new to the game, and I look forward to learning on as we go along. The fourth item that I find kind of interesting is that it seems to me when you have a tangible asset that you're using for collateral, that it gets more complicated than when you have an unsecured loan. So doing an unsecured consumer loan might be risky, but it's simple. And so looking at the tangible asset, when you're using that vehicle, trying to drive a favorable rate for the consumer, you have to be able to properly value that collateral. You have to be able to understand the depreciation of that particular collateral, and when there's defaults, you have to be able to understand how you manage that asset or collateral. What do you do with it? Where do you put it? How do you handle that? And in the traditional, with the traditional lenders, they have spent a lot of time establishing dealer relationships, understanding depreciation, and developing remarketing expertise, which is something in the auto space you're going to need no matter how you lend to it, in my opinion. A fifth point is rate competition is fierce in the auto space. PenFed Credit Union sent me a flyer in the mail this last week, and it's less than a 2% rate for a new vehicle. So how do you compete with that in market space lending? Because the platform has to get something, the lender's got to get a return, and that's a tough one. So you're going to move someplace else in the market, I guess, and you're not going to play in the super prime. So it's unclear to me where the efficiencies will come that will allow competitive rates using marketplace lending. And again, that may just be my ignorance about how it works in that space. And then finally, something that's kind of disturbing to me about all this is, for both the traditional lenders and the marketplace lenders, what are the disruptors going forward? Like Uber, who is now not only buying vehicles and financing vehicles in conjunction with the manufacturers, and Goldman Sachs and lots of other people out there. There's a lot of folks looking to provide vehicle and financing in this space. And how is that going to work as it relates to marketplace lending and traditional lending? And then when we start talking about these autonomous vehicles, are there going to be consumers that are buying vehicles? Or are they just going to be using them? And so are we going to have a space where you're going to have a lack of prospects when it comes to consumer financing? So in conclusion, I don't think marketplace lending has impacted the auto finance space in a meaningful way at this point, and it's really unclear to me how that's going to happen in the near future. There's just too many aggressive lenders in this industry as far as I can see at this time. So my opinions, I look forward to hearing anybody's opinion and questions after this is over. So thank you.
Thank you, George.